Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. We're taking a look here at Dog WIF hat. Got a lot of requests for this one, so I'm jumping right in. Just want to kind of brush you up to speed if you're new to the channel. I love making sure that we double check a small handful of back-end factors such as liquidation. We'll go ahead and look at that first. And then just quickly note too as well that I did add to my spot bag pretty heavy, or at least depends on how you look at it. I mean, it's a small position for me, but heavy for some, I guess. And the whole point of me mentioning that is just so you understand that I did send out a post here, if I'm not mistaken, it was yesterday, just kind of letting you know that the double bottom is in here. Is good area to consider support or buying at the support for your spot bag. So again, congrats to those who added to their spot bag between 125 and 145. If you take a quick peek here, I barely missed some good entries at 135 and 125, but you can see I got filled on quite a few good positions there. So I'm happy to be in at the 140 to 145 range. So awesome stuff there. What I want to talk about though is the liquidation first, kind of see if there's any incentive for the price action to go higher. We're going to look at open interest as well, and just recognize a few key factors in these kind of retracements and or pullbacks. Okay. So let's take a quick look here at liquidation first. So if you look here, actually just to open with this here, when we looked at the macro liquidation levels, that's what I sent out yesterday. You can see 140 is that heavy concentration liquidation that got swept. It's really common for a lot of longs to be heavy at support. For example, liquidation levels were pretty high there, and that has since been swept. So there's no opposition on the downside. So, the whales have no incentive to push the price action lower. They're just going to keep buying, right? Obviously, they're not the only ones buying. People like you and I are too. But the general sense here is that is likely the bottom for Dog WIF hat. And it felt good to be able to get filled at least on a little bit there. Anyways, when I take a look here, we can see 180 to $2 is that next area of concentration. So a lot of folks are adding to their shorts or taking shorts right now. The late shorts just got destroyed at 165 to 175. And then we got the extra late shorts, if you will, at 190 to 180. These actually aren't that late. They're all kind of relevant, in the last 24 hours. But the truth is, they're probably the medium to low leverage shorts. Okay, so they still have potential to get destroyed. So I would not be shorting this coin. It doesn't make a ton of sense to short things that are overextended right now, folks. That's just not what good trading is. Good traders don't short overextension. You look at a lot of other factors first. Okay, it can be hard to catch the top too. So generally speaking, you want to go with the trend. The trend right now is up, folks. You don't want to short into that. All right. So again, no offense to you if you shorted recently just because you kind of had this hunch or whatever the case. But the truth is, based on technical analysis, there's absolutely no reason to consider shorting because we broke some descending trend lines. We're over some important RSIs, and it's a very good market for this coin and most coins too. Obviously, Bitcoin responded very well to CPI data coming in over expectation, and that all factored into, right? So again, it's not only technical, but for the most part, there's a lot of reasons why shorting this coin is a bad idea right now. Liquidation delta is high. Most coins are exuding the same behavior. That's nothing to really concern ourselves with. We take a look at open interest. We've got the heaviest amount of positions there in about the 153 mark. Okay, so that 150 and then late longs at 160. This makes a little bit more sense to take a long at 160 because it broke through its local resistance. We'll take a look at that here on our charts, but let's quickly note the daily time frame first and recognize that we're not truly bullish yet. Okay, so you got to recognize this. Macro perspectives on all coins right now, for the most part, there's a couple of outliers, are showing us that we have more divergence, more bearish type of situations occurring here. In other words, taking a long into this can be risky. And again, there's a reason why I didn't take a leverage play. I took a spot bag play, right? I added to my spot bag. That's a totally different story. I just, put it in there for, a rainy day someday, right? It's my rainy day fund, if you will, one of my many. Having said that, though, I didn't take a high leverage or any leverage play right there for good reason, because that's not really the kind of dip you want to buy with leverage. Okay, so again, just throwing it out there, being more responsible. That's how you're supposed to do it. Again, no shade on you if you did take a leverage play. Everyone has different risk tolerance, but it just doesn't work well for me. Having said that, though, macro, we can kind of see this lower level here got tested. Once more, just to kind of give you perspective, on the weekly, the price has never closed below 135, just to give you perspective. So again, that's a good sign here. Either way you look at it, the whole point of me talking about this here is the simple fact that we're under all moving averages, generally not construed as a bullish sign. So we haven't broken bullish yet, but we are getting there with the smaller time frames, and I'll show you that in a minute. We're still under 50 on the RSI. Money flow index is coming with it. Stochastic swinging up. MACD is converging. These are all very positive signs from a momentum standpoint, but we still haven't broken through any key level resistances, okay? And I'm just gonna quickly touch on this here. This is likely a resistance for us at 220. Once again, because we spent 1, 2, 3, 4, 5 days roughly over about a 2 to 3 week period, and we couldn't pass that level, right? So it's gonna take some volume to get through that. So just know that is a potential resistance for us, all right? So there's that. We also got potential resistance here at about 188 because that was a previous support, all right? So we're gonna focus on that one too. 4-hour time frame, let's quickly note here, we are performing very similar to Bitcoin in a lot of ways. We're really close to 70-hour RSI. Generally speaking, the price will cool down for a little bit before it legs up. And then we can see the money flow index is right there with it. So that does imply we have sustainability likely in this price point, but not necessarily a situation where the price action is going to pull back super hard, but it should capitulate a little bit, right? It's very natural, very normal for that to happen. In fact, I'm looking for a second long, just so you know, in case you didn't pick up on this, you're not part of our community, we took 31% on our Bitcoin long from yesterday. We got in at 95.8, and then same thing with Dogecoin, 22%. That had a lot of confirming factors. I want to highlight that and touch on that because those are low leverage plays, by the way, folks. But the truth is, Bitcoin is likely to pull back to this 97.5K range, or at least, it's not a guarantee, but it would make sense for it to be retested as a local high. And if so, we may see some range-bound activity from Bitcoin. If this happens, a lot of altcoins are probably going to continue to follow suit. Because once more, Bitcoin dominance is decreasing overall in value here in the last few hours, so that's generally a favorable sign too. Okay, so again, just some food for thought there, but that whole scenario there, leads me to believe that we're probably more likely to pull back for just a short while before the price comes back up again. All right, now as far as the 4-hour time frame is concerned, generally speaking, the 50-day SMA is a big trend setter. So being above the 50 and the 20-day SMA gives me a lot of confidence here that 155 is a tentative bottom, okay? So we can kind of see here if we just draw this out roughly. I'm just going to go ahead and put this on the charts. I'll update our playout chart on our Twitter, Telegram, and Discord too. So if you're not familiar, I have all this information here for you. All right, so just go ahead and check that out if you want. But the whole point of me mentioning this is a simple fact that we're above the descending trend line now, breaking mostly bullish. So in a lot of cases, what will happen is the price action will come back down to test its local high. As we can see, what is it? 1, 2, 3, 4, 5, 6, 7 times to break that level, and it finally broke, okay? So that's going to be somewhat of an important level. So this rough estimate of 162 should essentially be the retest if it were to pull back and leg up from there. So it would be sensible to consider a long position at that point, right? So again, these are just I'm just drawing lines in the charts, but keep in mind, folks, these lines are can be significant at some point, just based on the simple fact that there's areas to pay attention to. Okay, there's no exact science here, right? Roughly, folks. I mean, this is just kind of I'm spitballing in a lot of ways, but these are all relevant and super important at some point. And it's good to be mindful of that. Anyways. So the whole point of me mentioning this is that I'm expecting the price action, if it were to pull back, to pivot right here and continue higher, to run concurrent with the moving averages. Because if you look at the SMAs, they're all hanging out right here. So there's a lot of confluence here. If the price pulls back to 155 to 160 range, maybe even 165, then we'll see likely continuation higher. So I've got my eyes on that area there. And in fact, I'm just going to go ahead and set an alert right now so I can be notified perhaps later. And what I'm going to do, by the way, folks, I'm not going to take it long in the blind. I'm going to consider taking a long there if XYZ is met, right? So if I get that alert later, I'm not just going to blindly jump in. I'm going to make sure it's still worth taking a trade at that time. Okay, you got to recognize that. You might see some people online just going hard and fast with leverage and just being total idiots. It may not be the best example. I don't know if it's different for you, but for me, I don't. My role models are not people that are total buffoons, right? They're not being super risky. Granted, I don't have really any role models in the trading world. It's a different story altogether. I don't watch any other influencers specifically, so this can be a genuine analysis, right? But again, mostly because I believe in myself, and after the last 20 years, I know what works and what doesn't. We're over the cloud, lagging spans free and clear, conversion lines over the baseline. 100% guarantee, or rather, let me rephrase that. 100% likelihood the price going up is higher than the price going down. Please note though, don't just take that and be like, oh, I'm going long at the top. There's still a decent chance we see a bit of a pullback and the price continues higher afterwards, right? Because it's very natural for coins to pull back, and that would be actually a good thing. But there's nothing here telling us it's likely to do so. So me personally, whenever I have situations like this, if I want to get some skin in the game, I'll take a small position here. and I'll have a secondary entry here, and perhaps a tertiary target, maybe at 155, because that is that area of confluence, heavy confluence with point of control, SMAs, and some important other support levels there. So that'd be like my 1, 2, 3 stop. So 1, 2, and entry number 3. Okay, that's generally how I structure it. And if you're not familiar, if you look at my trades here, for example, Bitcoin 95,800. I had secondary and tertiary targets just in case the price pulled back, which it didn't. It's fine. We still secured profits twice here, but on the same accord, it's important to recognize that multiple entries can be beneficial if you are not wanting to miss out or FOMO in, right? You don't FOMO into the top here. What you should do is take a small position. If the price pulls back further, you maybe consider adding to it. Anyways, that's just a good strategy for me. Not everyone has the kind of patience to do that, and it's okay. You find what works best for you, and if you're in my community and you're taking my trades, make sure you use your own risk tolerance. My risk tolerance doesn't work for everyone, okay? And that's fine. But I know that my entries are pretty solid. We have about an 80-85% success rate on average, and that's all just based on me being patient and ensuring that I don't FOMO into everything, okay? All right, folks, I hope this made sense. I described this correctly. Thank you so much again for watching, and obviously hitting that like button in every video. That really helps a lot. Let's grow this channel and get this in front of more people so less Moon Boys are getting the views. There's, again, no discredit to them. They're just a bunch of idiots that don't know what they're doing. So anyways, I hope you have a good one. Thanks again so much for your time. We'll see you in the next one. Take care.